Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another Breaking Down the Trade. This time it's Invest Answers updated Circle synthetic long, where he sold the third leg of the stool or a covered call against his position. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig into the trade. Quick update. This was the video I already made. I'm going to whiz through this quickly. Remember, Invest Answers had been trying to short Circle when it was up at 270. It dropped to 150. He thought it hit bottoms and he thought it was fairly priced. So he entered into a synthetic long. I'm skipping all the way down to the bottom. And he said for a $3 to $4 net debit, he bought the 150 leaps and sold the 140 puts. His break even was 153.50. The puts were outrageously expensive, so he sold them. He likes inefficiencies, and the leaps were quite cheap. He had even said on point number 5 that it will become a three-legged stool, meaning he was already anticipating selling a covered call against this position when it rallied, when Circle rallied, which is exactly what he did today. Remember, this was the setup from last week when he entered the trade into Circle, said that IADSS was golden, and again, he sold to open the 140 puts, bought to open the 150 calls. That's what we saw on the chart at the time. He timed it pretty perfectly per what I saw on the chart. Again, the trade, he initially sold the 140 puts, collecting $4,000, needed $14,000 to collateralize the put due to assignment risk. He bought the January 15, 2027 150 calls, spending $43.50. And again, there's a typo there. I still haven't corrected the typo. Resulted in a net debit of $3.50 a share, or $350. That makes his break even $153.50 by January 15, 2027. The $3.50 it costs him to put on the trade, plus the 150 strike price of the call option. Biggest risk is that Circles goes to zero. He's assigned the shares, $14,000 worth of shares that are worthless, plus the $350 he spent up front would mean a $14,350 loss, which we said I didn't believe would happen at the time, but I always throw out what the biggest risk is. Built it on Option Strat for you. Remember, if you decide to get Option Strat, go through my link. I think you save like $25 off your first month, or 25%. Sorry, 25% off your first month. And that's at optionstrat.com/G Dinero. And I was showing how this could return a 43x return if Circle just got back up to $300 a share. Now, this is the new portion of the trade. He's just opened the third leg of the Circle stool, and he sold the $200 January of this year, so January 2026, $200 calls for $22.50. He said he already holds the 2027 150 synthetic long for a $3.50 debit. By selling the $200 calls on the spike, he's taken $22.50 off the table, which leaves him with a $50 spread that effectively paid him $19 to hold the position. So basically, he's now being paid to be into the position. And if for some reason Circle shoots up above 222.50, he said he would roll these calls up as needed. This is what the chart looks like down in the bottom right-hand side right now. So you can see the spike. That's a 5-minute chart on Circle. I did it down to 5 minutes because you can see that coming out of earnings, you can see where the stock spiked overnight and then this morning shot straight up, all the way up as high as $189.95. So shot all the way up to 190. You can see where it is significantly mean reverted hard to the upside, shooting completely out of the top of all both the bearish and bullish confluence clouds, printing a couple of giant red mean dots, mean reversion dots. So those giant mean reversion dots say that it's significantly overbought. It's going to sell off soon. You see the sell signal shows up later on in the morning, and it immediately sells off as the day goes on. So that was a perfectly timed covered call on the part of James. Let's dig into a little bit more detail of it. He sold the January 2026 Circle $200 call for $22.50. That means he collected $2,250 per contract. They were sold against his $150 calls, which left a $50 spread. That means that if he got called out of his position for whatever reason, he would get $50. He owns a $150 call. He sold a $200 call. The delta or difference between the two is $50 or $5,000 per 100 shares of stock, since each contract represents 100 shares of stock. Now, something interesting to note, I didn't put the actual numbers in here, but he originally paid $3.50 for this position, right? For the original synthetic longs. He sold the calls, sold the puts for $4,000, bought the calls for $4,350. It was a net debit, remember, of $3.50 or $350. He just collected $22.50. He is now being paid $19 a share, or simply put, he's now being paid $1,900 to stay in this trade as we're going along. It's absolutely brilliant. If you think about it, there is no cost to the trade. The risk is that Circle drops below $140, which is what he sold the put for, remember? And if it drops below that, then he would get assigned the shares of Circle. But he's basically already been paid $19 a share to do so, because again, in that case, if that happened, the call would expire worthless. He's already been paid $19. So take 19 off of a 140, and it makes his new break even down there in the 121 range. So anything above 121 with Circle, and he's coming out ahead. So really brilliant move on this part. It immediately mean reverted. He can do this a number of times between now and January of 2027. These are January 2026 calls. He has all the way until then for Circle to get back up to 200. If it does, like he already said, he'll roll them up. He'll likely not just roll them up, but roll them out a few months to collect additional premiums. You could literally collect $5 to $10 premiums for the next 12 months on this thing, probably every couple of months. And in that case, actually get his break even down into the $10, $20, $30 range when it's all said and done. It could definitely be done. He did note that he'll roll them up if necessary, and Circle mean reverted hard, like I showed you on the chart, to below 170 immediately after he sold these covered calls. So guys, I hope you liked this video. It's a quick one, super fast to update that trade. Make sure you like the video. Make sure you comment what'd you learn, what'd you like best. Like and subscribe to my channel. Share it out with your friends and family. Remember, I coach on this stuff, guys. I coach on not only TradingView and technical analysis, but also on understanding options. Make sure, if you're going to trade options, make sure you understand what you're doing. I'd highly, highly, highly recommend taking my course. Those that are successfully trading options on a regular basis and making money. And that's what it's all about. Otherwise, most options traders initially lose money because they don't know what they're doing. And finally, thanks for tuning in, guys. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.